Indian corporate houses have got one over their American counterparts? Well, that is one way of looking at it. If we talk about office space leasing as a benchmark, a report by consultancy firm CBRE India states that Indian companies overtook American firms in gross leasing of office space during the first quarter of this year, with nearly 50% share in the total demand. This is the second instance of India Inc. pipping American companies in this parameter. The report noted Bengaluru, Delhi NCR and Chennai accounted for 62% of the overall leasing of 12.6 million square feet in January-March this year, in contrast to the previous quarters where technology corporates dominated leasing activity. BFSI firms and flexible space operators drove space take-up with a share of about 22%. Joining us at this point in time is Abhinav Joshi, who is the head of research India, Middle East and North Africa. Is going to join us very, very shortly. We're given to understand, and he's a representative of CBRE. But Karthik continues to be with me. Karthik, this shows that not just are corporates becoming more flexible, we're moving away from traditional office leasing, not just IT sector, but flexible office spaces as well.
Yeah, that's true. And I think what it also tells us is that the kind of job losses that the US has seen, India has not seen. So thankfully, there is still demand for office spaces. Secondly, I think this whole culture of hybrid, this whole culture of work from home, etc., may actually be a thing of the past. When we were talking about this in 2020, 2021, the assumption was that, there is going to be such massive business transformation that return to office is actually never going to happen. And at best, it's going to be a hybrid sort of a situation where you're coming to work only on a few days and taking, work from home as an option on other days. But that seems to be history. And the fact that despite COVID numbers rising yet again, I think last we checked, there were some 23,000 active cases in India. And this has only been growing at 4,000, 5,000 new cases a day. But the fact is that corporate India has realized, and especially the IT cities of Bangalore and Chennai, they've realized that perhaps work from home is not the most efficient for its employees. And these companies, incidentally, are the very back offices of work carried out in the rest of the world, especially the developed countries like the US. So again, now I hope this sustains, because at one end we are looking at a banking crisis in the US. We are overall looking at recession as a likely scenario. And the back office work for these sectors is done back home here in India, and these two cities in particular, in addition to these two, of course, Hyderabad being another city. But yeah, so as long as business continuity continues, and as long as the work keeps coming back to these cities, I think it's great news that that we are hiring more office spaces than other countries.
Okay, Abhinav is here. Abhinav, what are the prime factors behind India Inc. pipping American firms?
Well, the prime factors were around, the pent-up demand that we've seen since the last almost 12 months. Pre-COVID, the share of India Inc. used to be around 30-35% in overall leasing. Over the last 1 year, that's gone up to more than 50%. So as global firms, while they continue to prioritize India, and India is very core to their portfolio given our cost and scale advantages, over the last 6 months, we've seen some sense of caution, especially for large-scale transactions. But Indian firms are exercising their decisions. They're taking very fast decisions. They're not sitting on them. And whether it's banks or banking BPOs or financial services firms or smaller IT services firms or tech startups, they've been leasing spaces across major cities as well as in smaller markets. The other big differentiator is that, I would say the return to office has been relatively better from an experience perspective and from an occupancy perspective in Indian firms compared to the global multinationals. Occupancy levels have been relatively higher, and as a result of which they've been slightly more aggressive. And one major factor why India Inc. has done better is also because of the flex space universe. So our flex space universe, or the co-working or the managed space market, is primarily driven by domestic space operators. And they are taking spaces across the board, whether it's in Bangalore or Delhi or Dubai, Hyderabad, Chennai, even in tier 2 and tier 3 cities, because a lot of Indian and global firms need those touch points to connect with their employees. And if there is uncertainty around business projections or hiring projections, Flex, essentially feeds on that. These are some of the reasons why India Inc. has done much.
Okay. You know, there's an interesting trend that we were talking about, which is BFSI firms in flexible spaces, as you mentioned, overtaking the dominancy of corporates, the tech companies that traditionally were leasing more office space. What does it really tell us about the great new mix as far as, economic setup in this country is concerned?
Well, I think there is a larger diversification that's happening of demand, if we can say that. We've never seen this before. In fact, for the last at least 10 to 15 years, we've been a tech-dominated market. Every quarter, every year, we used to see tech players dominate. They still have sizable quantum of interest and RFPs floating in the market. If you look at the pre-commitments and the transactions being closed, but we've seen greater expansion from banking GCCs or global capability centers, domestic banks. Again coming back to the point of pent-up demand. Since they had not exercised their leasing for almost 2 years, we've seen significant quantum of leasing from domestic banks, both for retail branches as well as for their back end or the BPO setups. But even in engineering and manufacturing, even when it comes to research consulting, even in sectors like aviation, telecommunication, because the domestic economy is performing relatively better compared to some of the more advanced economies globally, and the projections are also much better. The outlook is much better. So firms who are exposed to the domestic economy and domestic consumption, undoubtedly, they're slightly more aggressive as far as their office leasing plans are concerned.
Okay. And the fact that Bengaluru, Delhi, NCR, Chennai still account for 62% of the overall leasing, there's not been much of a change there. These areas continue to be dominated by people who are coming from all across the world and all across the country, to be particular, to come and work in these cities and these cities only. What about the tier 2, tier 3 cities? Is there an uptick there as far as the office leasing is concerned?
Well, office leasing, I would say, primarily is driven by these 6-7 markets, including Delhi, NCR, Mumbai, Bangalore, Chennai, Hyderabad, Pune, and Calcutta. But post-COVID, we've seen a revival of the tier 2 story. We've been through this tier 2 journey for the last 20 years at several points in time, but this time it looks very credible because there is a sizable quantum of talent pool, especially in the tech sector, which is still based out of these smaller cities. So corporates want offices over there and touch points to connect with these employees. The other very important point is that infrastructure-wise, all these markets, all these cities fare much better compared to where they were 5 years, 10 years, or 15 years ago. They all have airports, they all have under construction or completed metro projects. They have very strong road, expressway, highway connectivity, very strong footprint of retail. Residential is growing, purchasing power and consumption patterns are strengthening. So there are at least 15 to 20 tier 2 cities where you're seeing either multi-tenanted assets or built-to-suit developments or campuses being set up primarily by firms. So yes, there is credible demand. Of course, it's not of that same scale as the tier 1 markets, but it's definitely much better and more credible compared to 5-10 years ago.
Okay, Abhinav, talk to us about the rentals. Of course, we've seen rentals explode really in the residential space in these 3 cities particularly. What about rentals in the office space? Have they grown at the same clip as residential rentals?
Well, undoubtedly, we've seen recovery in rentals last year. They've gone up anywhere from 2% to 10% on an annual basis. And in the first quarter, despite all the talk around uncertainty and monetary tightening impacting corporate profitability and a sense of caution by global multinationals, rents have gone across markets. In a couple of micro markets in Chennai, they've gone up in a couple of micro markets in Bangalore, in some prime locations in Gurgaon and in the West as well. That largely conveys, that while the market for some time has been heavily tenant dominated, it's sort of becoming a more balanced market now. And quality premium assets where you have significant, quantum of amenities, facilities, prop tech, elements like sustainable, the entire experience that they want as they're coming back. Those assets are definitely trading at a premium compared to rest.